morning, everybody. Many thanks for being here. So I'm super excited to be here this morning and share this scenario with the rest of the members of the panel. So yes, I'm Joana Gallo. I'm co-founder of A-Planet. And first, I would like to thank the South Summit for giving me the opportunity to be in here and to moderate this panel, and for having with me these panel members that are representatives of top VCs and also fund investment professionals in Europe. So we will have with us Ander, that will arrive a little late, and also Guillaume, that is here with us today, yeah, that is representing Euraceo, yeah, I pronounced it well. And also we have with us Jasper, that will join virtually, I think. I don't know where is the... yeah? Okay. That is from HB Capital. Okay, hi, Jasper. Yeah, he's there. I think. Hi, hello. Also give an applause. Okay,
hello.
So, hi. So I'm super excited of two things. First is the topic of the panel, that is how sustainability is considered for investment in VCs and investment professionals. And also, I'm very excited of have these panelists with us that will give us their point of view of how sustainability is considered when they are taking the decision of investment in different companies. So let me first talk a little bit about A-Planet, and that's why also I'm very excited of the topic, because it's very related with what we do. We are a startup that offers a SaaS platform for organizations to manage their sustainability, their information, their data, processes, and also take actions on this data. And also unleash on top all the power of the ESG data, that is environmental, social, and governance. This is our second year. We are in 5 countries right now, and more than 100 organizations use our platform to manage their sustainability. So that's why this topic is super interesting for us as well. So enough about A-Planet, and let's go straight into the topic. So as you know, so we have seen that there is a boom in sustainability recently, and also it's a hot topic in the capital markets. And we have seen a shift, a paradigm shift in how sustainability is considering when, for example, the VCs or the investment funds, they consider this criteria for selecting their companies in their portfolio. So I would like to ask you if this has changed the way you manage your investments, or when you're considering whether to invest in a company or not, if you consider that criteria already.
Yes, thanks. Well, at Euraceo, we are one of the larger investment managers in Europe, and also a listed company. So we've been conscious about these subjects for a very long time. Our ESG team is 6 people already, so it's probably one of the bigger ones, at least for European funds. So we have been focusing on this for a long time, and I think COVID, though, has, I mean, we've seen things that we've never seen before, like full parts of the economy that are shut down, you know, people that have been in difficulty, the health system that's been very tested. And so I think from our point of view, so it wasn't really a shift in strategy, but it's just to decide that, okay, we don't want to lose this moment and kind of go back to maybe how things were before. So it's really a case of accelerating. And so last year we wrote a detailed report with all our objectives. And whereas before we were doing everything sort of internally, now we're kind of going public with all of our ESG objectives, really to be sure to use the moment and not waste it. In that sense, for example, one of our objectives is health, or one of the UN objectives is health. And so we decided to increase materially the investments we're doing in the healthcare sector. So around 12% of our AUM today is in health. And just a few weeks ago, we announced that we acquired another investment manager just focused on health. So it's really a case of not necessarily changing, but accelerating much more to not lose the moment.
Oh, that's great. So you are very focused on health in the part of ESG.
It's one of them. Actually, I think we're, out of all the objectives, we're more focused on climate and inclusion. And those are the two ones where we spend most of our time, because you have to choose. I mean, we're a big company. We're around 400 employees, but you can't solve everything. So we do health, but really the two ones we focus more on: climate and inclusion.
That's great. And Jasper, about you, have you changed the investment strategy considering sustainability?
I wouldn't say we have changed it significantly, but what we did is we introduced about, I think, 2 years ago, ESG as well. We have now 2 people dedicated on the topic. We're a smaller fund, so we just have 45 people or so. But for us, it's 2 sides. So one is the internal, the company. So for HV itself, obviously we try to be carbon neutral. We look for diversity in our team, which then would hopefully reflect in our investment activity. And then there's the outside part, which comes to discussions with our LPs, but also when we look at investments. So every term sheet that we send to a company contains the obligation to follow certain ESG criteria, and that also already happened pre-COVID. And then obviously we help them. We have teams supporting them, how to implement that, how to prioritize that. A very early company might have other problems than a later company, and there might be the question where they should already follow all of those. And then we do direct investments like in Klima. That's a consumer app where people can offset and change their lifestyle to be more carbon neutral, for example. And we're looking for other companies a bit similar like yours that you introduce. So how can we help the world out there become more sustainable? Because we think it's a trend that is not just important, but it also can be very economically viable in the future. So there is money there, so we can combine both things.
Yeah, and when you say you combine both things, also I would like to ask you, in what perspective you consider this ESG criteria or this sustainability criteria? Maybe you do a kind of ranking, or you evaluate all the opportunities you have for investment, and you say, okay, this company or this startup is causing or is having more positive impact than the other, and it's a criteria to prioritize, or is more a yes/no? Like, is this company having a bad impact, maybe, or is not considering sustainability in the activity that they have? So it's more this ranking, or is a yes/no?
I think a ranking is difficult. I wouldn't say it's a yes/no, because we have opportunistic world, right? You see an investment, and then you have to decide if you invest or not. You can't just rank and wait for a couple of months so the next one is coming. But it's a discussion on our investment committee. It's part of the investment memo, and it has to be a criteria that we discuss. So, for example, if the team is not diverse, then this is the next action. Then they have to follow for us. If they are definitely not carbon neutral, then there have to be actions implemented within the next 12 months. So those things decide the yes/no. If they don't want to follow those criteria, then we cannot invest.
Okay. So you have a criteria already established for the companies in the potential, or potentially in the portfolio. Okay, great.
Yeah, well, I mean, for us, there's definitely some sectors that are that we wouldn't be investing in. So there is so-called maybe a blacklist, but these are fairly obvious. I mean, it's nothing like, it's just, yeah, the very obvious ones. And then the reality is also that us as investors, we have to bring value. And we have to help the companies that we invest in. So if we just have kind of a passive way to think about it, and as, all right, they're in the right boxes, let's do it, or they're not, and let's not do it, then, you know, we don't add that much. And because we have been thinking about this, and a lot of investors have been thinking about this much more than the companies themselves. So it's actually an area where we can help them, and we can give them benchmarks. Like, for example, I was mentioning inclusion, and that's one of the objectives there is to, in a way, spread sort of the wealth. So you don't have like just a very small portion of the population, or in the case of a company, a very small portion of the company that benefits from an outcome. It's a way to, you know, you have to have more employee ownership. And a lot of them, you know, well, this is one example, but there are others, where the startups, the company founders aren't necessarily aware that you can do, or you should do, or it'd be better to do, or like it would be, your employees would be more engaged, more happy if it's done in a certain way. And since we have the benefit of having time to think about this, and also having seen other companies do best practices, it's also our goal to come in and give advice. So it's not just a case of you decide from the outside and then you let people do their things. Of course, you have to understand what you're getting in, and sometimes you shouldn't invest in a company just because it's like not an ethical company, that's for sure. But I mean, most of the time, they're good people who are trying to do things well, and our goal is, take them from here to here in terms of ESG.
No, it's very good to hear that you are helping companies also to take them to the next level. And hi, Ander.
Hello, sorry about the delay, sorry guys. Yep.
Yeah, so I was asking them, it's very interesting, I would like to ask you as well, if you have changed the strategy that you have to select companies or in which you want to invest based on sustainability criteria or ESG criteria.
Definitely, it's a topic that is now on the table of every investor. I think GPs are asking for it. It's a topic that is very hot right now. And for us, yes, it's a topic that is now on the table. I think the big change for us is now when we make an investment, it's a topic that is on the table. So we look at the company and we'll say, okay, what will be the future of this company achieve for a vision? Is it a better future? Is it not a better future? Does it have any impact on the society? So that's a topic that I would say 2 years ago wasn't on the table. Now for us it's on the table. And for us, to be honest, is a topic that is another factor, but it's not the main factor, at least for the moment. It's not the main factor, it's reality. We still have fund that want to get returns to investors, so that's the main factor, but this is a topic that is another factor in order to make a decision.
So I was asking them as well, is that yes or no for you to invest in a company if they consider sustainability or ESG criteria, or is another criteria to consider?
Yeah, to be honest, for us, it's another criteria, is validation. We are not a sustainable only investor, so we don't maximize for ESG as output, maximize for return. But still is a topic that for us is important, is, as I was saying, a topic that is on the table, and every investment we make is something that we measure and we look at.
Perfect. And once you invest in a company, once a company is in your portfolio, how do you keep them accountable of what they do about sustainability? If you measure how they are doing in ESG, environmental, social, and governance criteria, and for that, do you use any framework? Do you ask them to use any tool?
Yeah,
Whoever.
I can
I
start.
think it's Guillermo, yes.
Yeah, we definitely do. We definitely do, and it's interesting because Eurazeo, we do both majority investments, buyout mostly. We also do minority investments, and it's different when you have 60% of a company and when you have 2-3%. Yeah. So for sure, all of our majority investments, 100% of the company, they do reporting, and we're very involved in that. And when you're a smaller shareholder, and us specifically, we're growth, so we invest. The companies have been around for maybe 6-7 years. It's not mandatory. I think at some point it will become, just because the earlier stage funds will ask it, or it's just in the mindset. But today, around 74% of our portfolio companies do ESG reporting. But it's more a case of we're not like super rigid, because it's not totally there in the mindset yet. But I think maybe 1 or 2 or 3 years it'll be there.
But you say 72, 75? That's a lot. Yeah, okay.
Yeah, no, I think it's on. I mean, as you were saying, it's on top of everyone's mind. So maybe 2 years ago there was some pushback. Now, when we do our due diligence, there's a questionnaire that they have to fill in. It's like, no problem.
Yeah, okay, that sounds great. And yeah.
If you want, for example, in our case, it's exactly what you were saying. No? We tend to be not in majority investor. We tend to be co-leads. We don't lead rounds. So when we don't lead a round, it's much harder to impose a certain criteria of ESG to the report, etc. So for us, it's hard to do this. But it's something that we're looking forward to do. And I think, as you were saying, that Guillaume, that this is changing, and companies tend to do it more proactively. The problem is there is different ways, as you know very well, Joanna, of doing it, and it's hard to consolidate information from different companies that do it on complete different standards. But this is, I think, a more reliable framework is coming, and we're happy for the companies to do it, but as we are not leading the rounds, it's hard for us to impose it, so we're not imposing it at this point.
Okay. Yeah. Jasper, I don't know.
Yeah, we lead rounds, and we also sit on the board, so we can impose those things. We're early stage investor most of the time, so obviously then there is the chance at least to start something. But as you two mentioned, it's difficult. You have to navigate also the returns and the building of the company.
Yep.
And you can't just tell them, hey, this is your main priority now. So what we try rather is to navigate that together, but also tell them what the target, for example, a growth fund like Eurazeo would be for following rounds. So we help them building this. But honestly, most of them, as you said, they are embracing it. They rather like it, that they see a framework and some kind of support than rejecting it. We've never seen any company rejecting this.
That sounds good. And you mentioned that, for example, in the due diligence or when you collect this information from the organizations, you use framework, standard. Do you use anything particular, anything that is global or something that you have created for your firms? Or
That's for you, Guillaume.
No, well, that's. I mean, it's interesting because there are frameworks, but there are a lot of frameworks. As investors, we can't, we're not ESG specialists. So we have a department that works on that, and they provide us with a questionnaire and questions to ask. And I'm sure it corresponds to something official. But I mean, there are a lot of acronyms. It can be scary, to be honest. ESG can be scary. It is a bit scary because there's like the UN goals, just so many of them. So we have a team working on that, which is good, and we kind of follow their framework.
No, but hearing that you have a team is super good because then you have really interest in this if you dedicate a team just for ESG information. So that's great. Yeah, what about?
For us, as I was saying, we cannot impose it, so we don't have a team. We don't have the size of Eurazeo, so we're a small team, it's 12 people. We cannot have a team dedicated to this, and we cannot impose it to a company. So what we do is try, if they give us, it's great. But as I was saying, I think it's something that's going to change over time, and it's going to be starting from much earlier. This is going to be a standard that everybody has to do. The problem is we need a standard, no 10. Once we get to one standard, I think it's going to be much easier for everybody to do it, and I think it's going to be done in a recurrent way. But we cannot, in our position, at this point, we cannot impose it. I don't know, Jasper, what do you think? You guys are imposing it, or?
Well, we see also a lot of frameworks. We tend to lean towards the ROSE framework a little bit more, but I wouldn't say it's perfect, and it really depends on the company. So we're not even imposing this, we're just recommending it if it would fit.
Okay. Yeah, and it's also difficult for the startups or for the companies to know what framework should I use, how should I report this data, it's like what they are expecting from me to report. But yeah, if you give this criteria or you give this guideline, it's good.
Yeah. I think, go ahead, sorry.
Some of them are kind of common knowledge, or so diversity in the board, diversity in the team, diversity in the executive committee. You don't really need a framework. You just kind of, it's common language, common knowledge. Climate also, although how do you measure it?
That's why you need the framework.
There you need the framework. So some of them, it's. You don't really. You can kind of do it intuitively. And I think you can do a lot of it intuitively, and then the framework is also just to measure.
But you measure at the time of due diligence or later during, once you have invested in the company?
We do both. We do both to see if it improves.
That's great. So I don't know if you know about the SFDR. Have you heard about that? It's
a little bit, but I'm not an expert by any means.
Okay, perfect. So that's a regulation that is that impose the companies, in fact the VCs and the funds, to report if their companies in their portfolio are sustainable or not. And this has been here from March this year.
Yeah.
So now is the version 1, but I don't know if you have considered this for your strategies or when you consider a company for your portfolio or for the companies that you have already in your portfolio.
In our case, I mean, regulation, it's from our point of view, is not very clear yet what is actually required and how to implement it. It's at the beginning. It's like when you get a new law, okay, you need to adapt. So we're adapting to it. What we have changed is more on the legal documents, website, information that we provide, etc. But to be honest, we haven't gone farther than that. And the version 2, we're not aware of what is going to happen there, to be honest. So wait and see for us, at least. I don't know if you guys have a different view on this.
Us is a bit different. So I mean, we're bigger, so
Yeah, of
we
course.
have more time,
Exactly.
more resources. So today, 80% of our funds are Article 8 or Article 9. That means that they have ESG components in them. Article 9 being that they, like, intrinsically, the goal, or part of the goal is ESG focused. And so we have, I think, a couple of funds that are Article 9, but at least on all of them we do reporting. So we're already there, and some of them are actually Article 9. So I think we're a bit of ahead of the curve compared to other funds.
So as of now, the version 1 like requires to report if they are sustainable or not. It's like a yes or no, and that's it. But are you prepared for version 2 as well? It's like
Yeah, of course.
yeah, okay, perfect.
For what they are saying, they are prepared. Yeah.
Yeah, super prepared. Yeah.
What about you, Jasper? Are you prepared?
Yeah, we're prepared. We are, the current fund already has the ESG criteria, and for the previous ones, we do it optionally for the portfolio companies, so they can even introduce it later. And then for the future fund, obviously, it will be the new ones.
Yeah, that's good. So if you want to tell us, how do you see the future of sustainability investment and criteria considering the companies in the portfolio and future investment?
From my point of view, it's a topic that is not one of these that is comes and goes. This is a topic that is here to stay, and it's going to stay for the long run. I think everybody is, especially if the pressure is coming from the GPs. If your GPs are asking you to do this, all the funds are going to need to adapt. If not, you're not going to get investors, right? So it's even if you are reticent to do it, it's coming. You want it or not, it's coming, and you need to adapt, and you need to find ways to do it. In our case, a little bit harder because of what I was mentioning. We're not leading rounds, so it's hard to impose. So it's more on funds that lead in this case to impose it, to actually impose it, and then of course we'll be really happy to have the data and be able to be more compliant, and that's something that we're looking forward. But it's something definitely that is here to stay and is evolving on a very positive way. And I think the effect is great. I mean, it's something that should have been here for a long time, but of course things take time to change. So it's good to see it.
Well, I think when I started my career in investing, so we already had to do the reporting, and to be honest, I thought, okay, well, this is a bit of a constraint. It's not our job, it's not the company's job, but okay, let's do it because we have to do it. And I think what we've seen since then, and particularly with the COVID situation, is that actually the companies, who have engaged employees, who have diversity, who have loyal customers, well, they perform better. If you treat your suppliers well, when there's going to be difficulties, they'll probably, give it back to you. So what's really good about ESG is, whereas maybe before we could think it was like no correlation between financial performance and economic, social, and governance. Now it's pretty clear that if you invest in the companies that focus on this, they'll be performing better. And this is not just like a concept. I mean, we've even seen some in our portfolio. We've seen like some material financial gain. So it's like an anecdote, but if you shift from normal packaging to recycled packaging, well, you actually spend much less money on your packaging. Another of our company, Caron Bar, which is a food company, they realized that a lot of their trucks were like half full or half empty, depending on your personality. And so they decided, well, we'll just bundle with other companies around us and will fill up the bus. And so this is, of course, I mean, you save. In their case, they saved a few thousand tons of CO2, but they also saved a lot. I mean, made meaningful economies. So I think if we would be in a tricky spot if ESG and financial performance were kind of, I mean, not working together. But the reality is that if you do focus on ESG, you'll probably have better returns. So long term, it's definitely something that will gain in importance.
Yeah, it's super good because in fact in A-Planet we see that the companies that invest in ESG from the beginning and also consider for their strategy and the decision making every day, they outperform their peers. So it's like we see this in reality and with data, so it's super good that you mentioned as well. And Jasper, about you, how do you see this future of sustainability investment?
So to be honest, first of all, personally for me, it's pretty easy because I invest in software and AI. And when you look at, especially, I guess, the carbon issue, it's pretty easy to offset server cost. In general, we do also investments like in Flixbus, that's the largest bus operator in Europe. And they are heavily investing, for example, in electric buses or in special trains that they operate. And this is not just happening more and more because of financial performance. And I 100% agree what you said there. But also in terms of recruiting. So we see that people attract more talent that way because the company has a different purpose than just getting money. So highly encouraging that. And I just feel like all the factors are coming together now that, as Anders said, this is here to stay because everybody's benefiting from it. And the only thing we have to be careful of, that we're not driving companies and maybe funds into ruins because of it. But I think that won't happen. It's rather that we have to push it a little bit than we have to stop it.
Yeah, that's great. Also, considering companies with a purpose, so that's super important as well. Okay, so thank you so much. It has been super interesting.
Thank you, Anna.
If you have any question or anything you want to ask our panel members?
No questions.
No questions.
We're so clear. Wow. Okay.
Everything was so clear. So.
There we
yes,
go.
there are two. I will repeat this. What is the framework you are using for reporting? No, if you choose one or two, if you use a specific one?
Reporting, I think I don't have the answer. I don't know if we have our own but the main kind of, in terms of objectives, what we follow is the UN Sustainable Development Goals. So the goals, and we choose to focus on two main ones, which is climate and inclusion. And so there we have a specific number of objectives. Like, for example, for our company, we want to be carbon neutral by 2040. And that means it's not like buying, carbon from other places. It's actually lowering our emissions. And inclusion, we have also a set of criteria, which is how do you share the wealth, diversity at all levels of the company, and also like sort of mental health criteria. But as for the reporting, I think we probably developed our own.
And so many.
I mean, obviously, there's been a change. I mean, when you talk about impact investment and sustainable investment, that requires a change in mentality and also vision from investors. They used to look more short-term before exit, like 5 years, probably. Sometimes, if it's held a little bit longer. In terms of now that you're getting into sustainable and impact investment, what is your time frame for exits? And how much really this has changed, the mentality has changed from an investor point of view?
From my point of view, the framework hasn't changed because actually the times that we have as a venture capital fund is actually regulated by law. So only the law change, we cannot think longer term. There is 10 years, 12 years maximum, and you need to sell the portfolio. So I don't think that time has changed. It's true that some of those goals are more longer term, and what you have to do is, okay, I'm not going to achieve, for example, the 2040. Well, some of your portfolio companies probably you're going to sell them before they achieve it, right? But you basically set a goal that by this year they need to be at this level, 50% reduction, whatever it is. And by 2040, well, they have sell it, you don't control over them, but hopefully what you have make on them outlive you, and they keep doing the practice, because you have made a good job at helping them develop this. That's how I feel about it. But I don't think it hasn't changed our investment period at all. I don't know, in our case at least. I don't know if you guys have a different view.
I'd actually challenge that a little bit also. So we're not pure impact. I mean, we're not an impact fund. We're like like everyone on this panel, we're traditional financial investor. And we also have the same time horizons, probably a bit shorter. And for sure, some areas probably take much more time. But if you focus, for example, on governance, implementing a profit-sharing plan in a company doesn't take 10 years. Having more diversity at the executive committee level doesn't take 10 years. So there are a lot of things that can be done fast. And obviously some investments, yes, will take time, but if you want to add value to the companies, it can go fast. And also, well, we invested in Back Market, which is a circular back market, and Vestiaire Collective, which are both circular economy startups. One is for refurbished electronics, another is for clothes. And so, of course, the end goal, I mean, if your end goal was to like save the planet, yeah, it would probably take time. But you can actually, you know, with these companies, which are not that old, you can have a lot of impact and actually, you know, materially change parts of the economy in a few years.
Yeah. Okay, I think we don't have time for any more. So, okay, don't know, Jasper, if you want to say something about this, or?
No, all has been said, all good. Time horizon is good, and the impact will come much faster, hopefully.
Yes, I agree.
Yeah. So it has been super interesting. So in fact, I fully agree with everything that you have said. Sustainability is here to stay. It will be a criteria for investment in companies now and in the future, even more. And we will have frameworks there for companies to be accountable about this. So thank you so much, and see you.
Thank you.
Thank you.
Thank you.
Thank you. Thank you.